No, that's good. You're working hard. I like it. Anyway, and then the quiz is when? Wednesday. Okay. And then the test is when? Friday. Holy cow. And we'll have a review session in there. And then we'll be sort of back up to speed, I think. Pretty much. Okay. So that's good. I guess it's all good. So let's get rid of, let's see, what else do we want to do? Let's just do some problems for you. What do you think? You guys read the chapter? So you read the chapters before I talk about them, I hope? I know. That's the best thing. You're going to read them anyway, right? Why not take the time to read them before I talk about them so you get something out of what I talk about, right? If you wait until after I talk about it, it's easier to read it, but then you don't get anything out of what I'm talking about. So it's one way or the other. You know, when you read it, it's like, oh, what are they doing? Yes, sir? Oh, of course. No problem. Come on in. We don't do anything in here anyway. I get paid to come here and bullshit with them. They pay for it. They don't know why. It's all right. I'll give them credit at the end. That's all that really matters, right, guys? All we care about. Okay, I'll get rid of this thing. There we go. All right. Anyway, seeing as we already covered a lot of this stuff, and now you've read it, and you get that, why don't we work a few problems? You guys can pick the problem if you want, or I'll just do one. I don't care. Why is that staying there, though? Go away. Okay, there we go. Good. All right. So, things like exercise 4.6, 4.7, have you tried those yet? Those are some of the ones I suggested, I bet. Yes, sir.
Could you go over M4-4?
Oh, M4-4, absolutely. Sure can. M4-4, recording adjusting entries on deferred accounts. What two things can you defer? Defer means put off revenues and expenses, or you could accrue them, which means speed it up, right, basically. Okay, do we defer the cash, or do we defer the revenue or expense? We defer the revenue or expense, and that messes people up. So they're going, wait a minute, I didn't get the cash, I can't record it. Well, no, that's what we're talking about here. That's an accrual. Or I got the cash, I don't have the expense, what am I going to do? Okay, so these are deferrals, so what are they going to be? What are the possibilities for deferrals? Deferred revenue, right, which we'll call what? Actually, you can call it deferred revenue, people do, but what's the other name for it? Unearned revenue, yeah, which is easier to understand at first, probably, right? And I like that term a little better anyway, personal preference. Okay, unearned revenue. And then on the expense side, what do we call it? A deferral. Prepaid. It's a prepaid. It should be instant, you guys. It needs to be. Okay, instant. Oh, yeah, big deal. I paid for it in advance. I haven't used it yet. I prepaid it. Right? I got paid in advance. I haven't earned it yet. It's unearned. Right? Good, aren't we? Unearned revenue. It's that simple. Get it down so it's just common sense to you, okay? And it's not something to remember. I keep saying that over and over, don't I? But what do we do every time we hear a new term? We go, oh gosh, how am I going to remember that thing? No, figure out what it is. Make it fit with everything you already know. Unearned revenue is a what? Asset, liability, equity, revenue, expense. Liability, absolutely. How do you increase it? Credit, how do you reduce it? Debit. What's a prepaid? I bought something I haven't used yet, and I still haven't. What do you think it is? It's an asset, it's a possession. How do you increase it then? Debit, how do you reduce it? Credit, big deal. What does a prepaid become when you use it up, of course? You used it up. What is it now? An expense. What does an unearned revenue become when you earn it? Revenue, of course. It was, unearned revenue, and now it's earned revenue. That's it. Wow. Okay? So this one says what? In each of the following for Romney's marketing, three-step process. Determine revenue was earned or expense incurred, determine whether cash was received or paid, whatever. Compute the amount of the adjustment. Okay. So if they collected $1,200 for the period December 1st through April 1st, and they credited it to unearned rent revenue, you know what we could say is they credited it to a balance sheet account. I like to do that. Would you know that's unearned rent revenue? Rent, right? Yeah, you would, wouldn't you? Balance sheet or real or permanent all mean the same thing. Real accounts because we don't close them. Permanent accounts because we don't close them. Okay? Or it could have gone to a what? Income statement account, right? If it goes to an income statement account, that's also a temporary account. Why do we call it temporary? Because we close it, right, end of the year. Or nominal, because we close it. So those terms are kind of interchangeable, okay? So it could have gone that way. In fact, let's do this one if they did it both ways, okay? This really gets it down. It seems like Manny's just trying to confuse me. You do feel that way in this class, don't you? I come in here and he's just trying to confuse me. That's right. You can read it, you can see what the author does, and you can copy it and not know what you're doing, huh? And then I can give you a quiz. It's got, well, you changed something. Well, yeah, because the world changes constantly. You got to figure out where you're at, where you want to be, and then the adjusting journal entry is nothing. If you figure out what is in the account right now, no matter what the account is in the general ledger, right? You figure out what it is right now, and then you figure out what you want it to be. Can you make the adjustment, either debit or credit the account, no matter what it is? Asset, liability, equity, revenue, expense. Of course you can, right? So let yourself do that. So here we go. Let's do this both ways. Why not? Oh, there it went. Okay. Let's do this both ways. Let's go to unearned revenue, so the balance sheet account. Okay, so we'll do the balance sheet. And then let's do one where we went to the income statement account. By the way, I don't care if you go to unearned revenue or service revenue, whatever it is, marketing revenue, rent revenue, isn't it? I don't care. Because you know what? It's unearned right now, and later it's going to be earned. All I want to make sure of when I do a balance sheet income statement, I want to make sure the portion that's not earned is in unearned revenue. Don't you think? It's a liability. And I want to make sure the portion that is earned is in the income statement in rent revenue. Huh? That's all we want. So I don't care where they record it. Now, I'd rather they didn't record it to land or something, because it'd be a pain to go find it. But even then, we could go find it. That'd be a mistake, of course. We'd go find it and fix it, right? If they credited land, how would you fix it? Debit land. Exactly the same amount. Get it out of there, okay? So what they said in the problem was they collected the rent, okay? So this would have been at December 1st. So at 12/1, they collect the rent. What did they collect? Cash. So what do you want to do? It's an asset. You have more? Yes. Or 1,200. And what would you credit? They suggested they went to unearned rent revenue. If I said balance sheet, whatever, okay, what would you do? Unearned rent revenue. What do you have to know, guys? This is really critical. What do you have to know? That's a liability, right? You got to know that. And that's why we're crediting it, right? Okay, sure. Okay, good. All right. So then it says their year end is December 31st. Okay. And this is going to cover a period of what? What to what? How long is it for? It's for a year, isn't it? But no, it's not. It's for December, January, February, March, April. Is that right? No, not April. March. It's April 1st. Don't count April. How many months? Is that 4? It's 4 months. Ah, we got to know that. 4 months. So how much is it every month? $300. What do you want to have? What do you want to have in rent revenue then after 1 month at December 31st? They said the year ends December 31st, right? By the way, the year end can be any day you want it to be, any month, any day of any month, right? Doesn't have to be December 31st. We can use any month we want. And the reason people do that is maybe for tax reasons, right? You don't want this. You might be a cash basis taxpayer at December 31st, so you make your year end some other year for your company. That's one reason. And we'll talk about that stuff later. And then the other reason is you might be really busy at the end of the year. I don't know, if I was selling toys, I probably don't want my year end to be December 31st. When is my most active month? What's my most active month? Probably November, and then December after that, right? Why? Christmas, right? So I might want my year end to be March 31st, sometime when I'm not very busy, huh? You got the idea? Depending on what you're doing, what you're selling, okay? So how your business works. Anyway, so December 31st is their year end. How many months went by? 1. So we just decided, didn't we, that out of that $1,200, $300's been earned after 1 month, right? What account do you want to have 300 in? Rent revenue. How much has not been earned? You know, you got paid $1,200 in advance, and now you've earned 300. How much have you not earned? 900. What account should be 900? Unearned rent revenue. It's just like that. So what you could do is you could set them up like this. I think it's a really good idea. You can do it in your head like we just did. Or you can write it down. If it's faster to write it down, right, guys? I think I'd do that at first, at least. Unearned rent revenue and rent revenue, right? It's going to be rent revenue after we earn it. It's going to be unearned rent revenue until we do, right? So what they started out with at December 1st at 12/1 was they put in 1,200 here. Everybody agree with that? It's true, isn't it? They put 1,200 in there. Okay? Now what do we want to have at the end? We have nothing in rent revenue relating to this one at least. Okay? And what would we like it to be? Well, we earned 300. We want it to be 300. Right? We still have not earned 900. Would you guys agree with that? We want this to be 900. That's what we want those balances to be at December 31st. Does everybody agree? There's nothing to it. It's just 1,200 divided by 4. It's 4 months. Okay, so what do we do? How am I going to get rent revenue up from 0 to 300? See what I mean? I wrote down where I'm at, where I want to be. I wrote down where I'm at, where I want to be. The journal entry is a joke. What do we do, guys, to rent revenue? Credit it for 300. That's all there is to it. Okay, so rent revenue goes up by 300, and that's now on my income statement. Boom. 300 more revenue, 300 more equity through retained earnings, right? What do I have less up here? Yeah, I got to have a debit here for 300, so I have less liabilities by 300, don't I? Okay, so unearned rent revenue. How can anybody miss these? And a whole bunch of you will, particularly on the first quiz. Then on the test, you start getting them right. And on the final, you'll nail them all. That's what's going to happen, okay? Because it'll still be fuzzy on it, okay? All right? So, and that's okay. It's no big deal. It takes human beings a while to learn things. We're not machines, okay? It's all right. Just keep working, keep working. Okay, let's do it the other way. This is what the problem asks for. Let's do it the other way. What if they went to an income statement account? What would the journal entry have been at December 1st if we went to an income statement account? What would it have been? It'd be a, really? Prepaid's an income statement account in the world you live in? I think that's an asset. So what? Income. You're used to it. Okay, what? What's the income statement account? I think revenues and expenses are income statement accounts. Come on. What's the income statement account this would go to if you put it to an income statement account? It's rent that I am going to earn. If I put it to a balance sheet account, it would be unearned rent revenue. What's it going to be when I earn it? Rent revenue. Guess what the income statement account is that we're going to put it in? Rent revenue. Scary. We got the cash, so what do we need to do? You guys, it's the same company, it's just accounting for it slightly differently. And it doesn't make any difference if I put it in unearned rent revenue or rent revenue. You're going to see that when we're done with this little example. Okay, it's going to be true with all the deferrals and accruals. So, I got cash, you guys. What do you want to do? Yeah, we debited cash here. It's the same company, same cash. Okay, just accounting for it slightly differently. No big deal. So, I wanted to go to an income statement account, or nominal or temporary account. What account do you think it is? What's this stuff going to be after I earn it? Rent revenue, so I'm going to call it rent revenue. I'm not doing a financial statement at December 1st. That's just fine. Either one of these is just fine. Huh? I'm doing a financial statement at December 31st. I got to have the accounts right then. Okay, and I'll show you a third way we could have done this, and we're done with this one. Okay? So, what's going to happen at December 31st, you guys? Now, be careful. Where are we at right now? Let's figure that one out. Just like we did here, okay? Just like we did over here. Let's figure it out. I'm going to have unearned rent revenue, aren't I? We already figured out how much we want that to be. And I'm going to have rent revenue. Would you guys agree if people paid me, rent, I'm either going to have earned it or not at the end of the year? Yes, sir?
How come you didn't call it unearned revenue?
Because I went to an income statement account. It's going to be rent revenue after I earn it. So you can either go to a balance sheet account or an income statement account, and I'm going to show you who cares. Because you're going to end up at exactly the same place in your financial statements when you're done. Right? Don't memorize what you're doing. Figure out what you're doing. Okay? Where do I want to be when I do my balance sheet? I want to show 900. Don't you? Unearned rent. Where do I want to be in my income statement? I want to show 300 rent revenue. That's it. That's all I care about. I get there, who cares? Very, very flexible, right? Okay? So what do we do with this entry? Do you agree this is going to be rent revenue when we earn it? Yeah, so is it okay to put it in rent revenue? We're going to earn it someday. Do you all agree that we haven't earned it yet, so it could be unearned rent revenue if we want? But if you put it in unearned rent revenue, you're going to have to recognize some of it. What does recognize mean? record an adjusting entry or record a source entry, recognize it in the financial statements. Record it is recognized. What does realize mean again? You get the cash. So we realize the cash no matter what. We're not going to recognize the revenue until we earn it, right? Here. But over on the other one, we went ahead and recognized it. We're going to take it out. It's all right. We'll have the right amount in the income statement and the balance sheet when we're done. So what do I have in unearned rent revenue here? If I do it this way over here. Nothing. What do I have in rent revenue? 1,200. Okay. So where do I really want to be? What did we already compute? How much of this have I earned? 300, not 1,200. I want that one to be 300. Don't you guys? That's what I want. That's what I want to have at December 31st is 300 in rent revenue, because that's what happened. I only earned 300 of it. Okay, what do I want to have in unearned rent revenue, seeing as I have not earned 900 of it? 900. That's it. Those are the balances I want. Everybody agree? Okay, now can you do the entry? How do you make rent revenue be only 300 when it's 1,200? Debit it for 900. This is too easy. There's your adjusting journal entry. Debit rent revenue. 900. Credit what for 900? Yeah, it's 0, and I wish it was 900, so I got it. And look at that. We ended up at exactly the same place on the balance sheet and the income statement. Balance sheet and income statement. We did, didn't we? Exactly the same place. So who cares which way we do it? So you might have two bookkeepers working for you, and one learned, no, it has to go to unearned rent revenue. And the other one learned, no, it has to go to rent revenue. And you can say yes to both of them. Who cares? At the end of the period, you got to figure out how much was earned and how much wasn't, and make an adjustment journal and fix it. Do whatever you want. Just don't put it in land or building or, salary expense or something. Okay? Please put it into one of those two accounts because it has to do with rent that I'm earning. Don't put it in prepaid rent either, okay? Rent expense. All right, guys? So it's real flexible. Let me show you an even easier way. If you knew in advance, oh, by the way, you're renting 1,000 different properties. Renting out, in this case, 1,000 different properties. They rent the properties on all different days and for different numbers of months. So the way I'm going to show you now, it's going to look like it would be much more logical, but not if I had 1,000 of them. If I have 1,000, I'd use one of these two approaches, right? And just make an adjusting entry at the end of the accounting period to make sure I have the right revenue and the right unearned revenue, right? Okay, let's do another way. How about if I knew in advance, this is the only rent income I'm going to have, and I do know in advance that I'm only going to earn 1 month, right? What I could have done at December 1st is just this. Debit cash. How much, guys? How much cash came in? Yeah, so let's not change the world here on ourselves. How much are we going to earn this year by December 31st? 300. Rent revenue. How much am I going to not have earned at the end of the year? 900. What would you call it? Unearned rent revenue. And guess what's nice about this? What's your adjusting journal entry? You don't need one. You got exactly what you want on your financial statement. Again, why don't companies do this? Because they have 1,000 properties they're renting or 10,000 properties they're renting out. Got the idea? So it'd be really annoying. All the training you'd have to do of your staff to do this, the programming of the computer to do it, right, which we could, right? Both of those we could do. That time and the hassle messing with it. Imagine somebody inputting all those rent receipts as the cash comes in. You'd have to figure out how much you're going to earn this year and how much you're not going to earn this year for every single one of them. What would be easier? Debit, cash, and credit, either rent revenue or unearned rent revenue, right? And always do it exactly the same way. Just make an adjusting if you like. Okay, everybody got the idea of this now? I like to give you this early because I want to get you out of this idea of, oh, gee, I could remember how it's done, right? And now I got it made. I know what the entry is for that, and what I'm going to do is I'm going to give you one, I'm going to say, oh, they went to an income statement account. And you're going to give me the answer as though it went to a balance sheet account, because that's the example the author showed you in the book. So all you know how to do is what your boss showed you how to do. You couldn't actually figure out something for yourself later. I've had employees like that over the years, lots of them. Don't keep them very long. I don't want to show them everything to do, or I could have just done it. Right? If I have to show you every single thing you're going to do, what are you for? You're making my life more difficult. I could have done it faster to show you how. If I wanted to work this problem, how long do you think it would take me? Would I have to spend an hour talking about these problems? What the heck? They're only 3-minute problems. I could go do something else. Why am I spending so much time telling you guys how to do this? So you know how to show somebody else how to do it. Right? That's where we're going. You're not going to do this. You're going to know what your employees are doing. Okay? That's it. And what the computer's doing for you. Thank goodness for computers when they work. Okay. Boy, it's taken forever. By the way, I don't care if we're doing this one or we're doing those other two I was looking at. It's all the same stuff. It's all the same. Every single problem in here is the same problem. Over and over and over. Right? Yeah.
Okay, so like for the income statement, when they, for the first month of December 31st,
Yeah.
they only paid you like $300. Like how on the
They paid you $1,200. You only earned $3. They paid you $12. That's going on your balance sheet. The $1,200 is added to your balance sheet, right?
Oh, where is it counting for everything?
Oh, you bet. So we can do, well, in this case, December 31st is their year end. Even if you're doing only annual statements, which almost everybody does monthly, but even if you're only doing annual statements, you'd have 300 of revenue, right? And you'd have 900 unearned. Maybe this will help. What would you, let's say we're doing monthly. What would happen the next month? What are you going to do the next month? You're going to do exactly the same entry the next month, right? Take another 300 out. What would you do if you did it this way over here? Actually, we'd end up doing the same thing, but now put it into unearned rent revenue, right? So it'd be the same as this entry the next time, right? I'd take more out of unearned rent revenue and put it into rent revenue. Yeah. Separate cash flow from earnings. Separate cash flow from expenses. It doesn't matter when the cash changes hands. It matters what? On revenues when I earned it, and on expenses when I used the thing up, right? When I incurred the expense. Does that make sense?
Yeah, I just feel like confused on like what side of like the bargain that you're on. Like if you're,
Oh, I'm the landlord here, right? I'm receiving the rent income. Let's do the other side of this. Let's do the rent expense. Maybe that'll help. What would it be if I was the tenant and I'm paying this rent? What am I going to have? Instead of rent income, what do I have? No, instead of rent income, rent revenue, what I have? Rent expense. Instead of unearned rent revenue, what do I have? Rebate. Yeah. Balance sheet, income statement, income statement. Let's do that. Okay, let's do that with it. Okay? And we can do that both ways too, just to make our life difficult. Okay? The idea is not to make your life difficult, but when you go back and you start working these problems where they're not asking you to look at it different ways at the same time, it's just going to be boom, 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 nothing to it. Right? Just read carefully, know where you're at, right? What did they do? All right, so let's go the other side of it then, okay? I can't even get off of part A. Okay, here we go. Let's say we're thinking about the balance sheet. Now, we are the tenant this time, right? It's going to be a rent expense for us, okay? We're renting a warehouse or whatever it was, okay? Income statement. All right, so what if they got cash, what happened to us? Why do students say we lost cash? I don't think when I paid my bills I lost it. I think I gave it up. But, you know, if I bought a house with the cash, I wouldn't say I lost the cash. I'd say I got a house and gave them cash. Lost. Okay, anyway, we have less. Yeah, okay, we have less. Okay. We gave up the cash. You can say lost if you want. Okay, you guys are going to be investing in your retirement plan and say, I lost all my money. I put it in the stock market. So, okay. People are going to think you're crazy, but you didn't lose it. Because you put it in the market, you're probably going to get rich because you put it in the market. Okay, anyway. So what do you want to do? You gave up cash. What are you going to do with cash? Guess what we do over here on the income statement side if we gave up cash? Yeah. No matter how you do it, of course the cash left you, right? You gave it up. Okay, so if you're going to do it in the balance sheet, what do we call it on the balance sheet? We pay something in advance? And by the way, is this a deferral and accrual? It's a deferral still, right? I'm deferring the expense till later. Just like on the revenue side, I deferred the revenue till later. This is a nice little problem to work. They all are. They all work.
Could you call it a prepaid rent
Yeah, if you want to put the word expense on there, you can, but be careful. If it's prepaid, that's an asset. If it's just rent expense, that's the expense. Same thing with unearned revenue. You can just call it unearned rent if you want. We know it's unearned rent revenue, right? But if it's earned, it's rent revenue, right? That word unearned makes it a liability. The word prepaid makes it an asset. Because unearned is a liability, right? You haven't earned it yet. You owe them the work. And prepaid, or in this case, you owe them use of the building, or whatever it is. Okay? And prepaid is you haven't used it up yet. It's an asset. Okay? That's it. Okay, so what would you debit here if it's going to be an expense? What's the expense going to be after we use it up? Rent expense, so that's where you go. Is that getting it through, guys? Going from confused to understanding, right? Here we go. All right, good. All right, so and what was that, December 1st? And it's the same deal, okay? What do we have? Here I have prepaid rent. I put a $1,200 in there. And by the way, I'm doing this, right? I'm recording these myself. It's not like it's imposed on me, although, or my employees are doing it, right? Under my instructions, so it might be right or not, but, you know. Rent expense, what does it have in it? Relating to this particular rental contract. Nothing, right? Okay? We'd be renting lots of properties, so rent expense would include probably a bunch of properties. Okay, over here, what would you have in prepaid rent? Seeing as I did nothing to prepaid rent. Nothing, right guys? What would I have in rent expense? Is that right? That's where I'm at. It's December 1st. Everybody agree? Okay, that's what I put in. Where do I want to be at December 31st on all these? Where do I want to be? How much have you used up?
300.
I want this account to be 300. Good. Regardless of which way I'm accounting for it. Rent expense should be 300. What should prepaid be? 900. Right, guys? Okay, two very different journal entries, aren't they? What do you do here? What do you do if you're doing it this way? Prepaid rent is now 1,200. I wish it was 900. What do you want to do? Credit for 300, of course. Good. Debit. Expense to be 300, so I'll debit it. Get it to be 300. And I am done. And then next month I'll do the same thing, won't I? The month after that I'll do the same thing if I'm doing monthly statements. By the way, if I'm doing monthly statements, I have to make all these deferral and accrual adjustments every month. If I'm doing quarterly, I do it every 3 months. If I'm doing annual, I do them once a year. Nobody does annual. Do you want to run your business only knowing what's going on once a year, or would you rather know all the time? All the time. So at least monthly statements. And then in between the monthly statements, we have other things we keep track of. What's happening to your sales and stuff, right? When your bills are due and all that kind of stuff. Nobody does more often than the monthly statements. It's too much work. Cost-benefit trade-off, right? You don't get enough additional information. But I don't want to run my business for a full year and find out I'm losing a whole bunch of money when I thought I was making them. Because you could have all kinds of cash and be bankrupt. Losing a lot of money. Or you can run out of cash and be making money. So it show you that as we go along. That happens more often. People make a lot of money and they run out of cash. And then they lose their investment to somebody who has lots of money who comes in and buys it for almost nothing. Or they're going to go bankrupt after, they get some cash in it. They only buy 51% of your business. You guys are good friends and you start a really neat business school and you're making all kinds of money, on paper, where you make a lot of money. You run out of cash, undercapitalized, we call it. And then somebody comes along that says, I'll give you $1 million. But I want 51%. Now you're their employee. Right? You get 49%, but they make all the decisions. Don't be undercapitalized. Right? You always ask for money before you need it, not after you need it. It's too late. How many people are willing to invest money in you if they are really quite sure they're going to get paid back? They need the money back, plus the interest or plus the dividends or whatever they're going to make from that investment. Everybody. How many people are going to loan you money if they think you might go bankrupt? Nobody. Yeah. the journal entry be here, you guys? Simple. It's 0 in prepaid. What do you want it to be? 900. Yeah. And 900. Right, guys. Rent expense. It's pretty easy. Not a big deal, is it? Do you see it? A little clearer? Okay. Each one we do. Let's try another one. Purchase a machine for $32,000 cash. Company estimates annual depreciation at $3,200. Good. Assuming no salvage value, which means that what you're going to sell for it at the end. In a few chapters, we'll do this. So we'll do equipment and buildings. It's depreciation. But yeah, assuming that you're going to sell it for nothing at the end, in other words, you completely use it up. How long is the life of this machine? They bought it January 1st, their year end is December 31st, so this is a full year, and they say the depreciation is $3,200. If you're using straight line depreciation, which means the same amount per year, straight line. How would you figure that out? How many years is this machine going to last? 10, yeah. 32,000 divided by 3,200. Simple, huh? Common sense? What is depreciation? It's a representation of using up the asset. Why would you buy a piece of equipment or a building? Why would you buy those? To use it. To do what? Generate revenues. So it's a cost of generating the revenues. As you use up the piece of equipment in the building, it's a cost of generating revenues. Okay? That's what we're doing. Everybody got it? So what do we call all the costs of generating revenues? Expenses. What would be a really good name for expense that is from depreciation? Let's call it depreciation expense. You like it? So really what they did was they took the cost of the asset, which is $32,000. They subtracted the salvage value of 0. That's what I'm going to sell it for at the end. Salvage value or residual value. If it's more than 0, I'd subtract whatever it is. If it's 2,000, I'd subtract 2,000, and I'd depreciate the rest, right? And just depreciate it down to the point that I'm going to sell it for. My estimate of what I'm going to sell it for, which is the residual value or salvage value. Okay, so my depreciable value, then, we'd call this, in this case, is the whole $32,000. What's the life of the asset if we're using straight line? We just decided they must have used 10 years, right? So how much are you going to depreciate every single year on this thing? $3,200. I bet that's what they did. So every year I'm going to have to make an adjusting entry, or if I'm doing monthly statements, I do 1/12 of the $3,200 every month, huh? Make sense? So when I did 12 times, it'd come up to the $3,200. Okay? So I'm going to debit what? Depreciation expense. For $3,200. Now, what are we going to credit for $3,200? You know what? With everything we've done so far, I think we would credit equipment. Wouldn't you think that? But here's the deal. Listen to this carefully. Does the piece of equipment go away? I've got a little Miata up there that, you know what happened to me yesterday? I've got a suit on. I'm driving down the freeway. I'm late for a meeting. I knew I was going to be late for it. I have a meeting that goes to 10:30 downtown at the Fed, the Federal Reserve in Louisville here. Anyway, I'm at that meeting, and I've got 30 minutes, no kidding, to get down to a bank in Shelbyville. What do you think the odds are of making it? You know, there's no way. So I knew I was going to be late. So then the meeting runs over 15 minutes, of course, and so I finally leave and get out of there. And I'm driving down, and then my Garmin doesn't work for exactly where this bank is. Oh, by the way, they had two. They had a downtown branch, Cub Bank, Citizens Union, whatever it is. Anyway, bank. Anyway, they had a downtown and then went out in the sort of the suburbs, just a little ways away. That's where they built the new one, which is now their headquarters. I'd never been to either one of them, so I go to the downtown one, even though I'm already a half hour late. Anyways, and for a kind of an important meeting. But anyway, I'm driving down the freeway, and I go over a bump, and top on one side, the little latch to hold it down, converting the other, pops up. And I'm going 70, and it pops up, and so I pull over, warning flashes, and I put the thing down, and so what the hell? So I start driving again, hit another bump, and it pops up. The little metal, little metal lip that sort of holds it in place, I knew it was getting worn. But it's fine, right? It's more worn on the driver's side. I'd rather the driver's side came loose, though, because it's closer to me. Luckily, Miata's small enough. It happened 3 times like that. I reached across every time. I just kept going after that. Not 70, I'd slow down, you know, a little bit, and flip it back down. So it took me forever to come back because I didn't go up the freeway. It doesn't open if I'm not up the freeway. You're not supposed to drive convertibles in the winter anyway, right? Only when the top's down, apparently. Yeah. So it was an interesting day. So what I was going to say is that car is 15 years old. Is it still in existence? Yes. So we don't reduce equipment. What we do is this. I'll have equipment or whatever they call it, cars, trucks, I don't know, whatever it was. How much was it? $32,000? When they bought it, what they would have done is debit equipment, $32,000, credit cash for their down payment, and credit notes payable for the rest. What do you bet? That's what they'd have done. We've already done entries like that, haven't we? Okay. So that $32,000 equipment, what we'll do is we'll track how much accumulated depreciation we have on it, okay? And what we're going to call this is net equipment, which is net of accumulated depreciation. So this is our first account that has opposite the normal balance. And another word in Spanish for opposite is contra. Any historians in here know about the Contras in Nicaragua? Ronald Reagan's massive scandal during his presidency. Everybody's got to have a really good scandal. Congress said we could not support the rebels. We couldn't spend money supporting the rebels in Nicaragua. They had a communist government, and we supported throwing it over, or Reagan's administration did, and overthrowing it. And we weren't supposed to support it. So Oliver North, ever hear of him? We don't teach any history, especially history that makes us look bad as a nation. Anyway, what happened was Oliver North, who worked for the president, arranged to sell weapons systems to Iran, who was our enemy. And then we took the money and we gave it to the Senate, the Contras, they call it. Contras against, all it means, the Contras in Nicaragua, and they overthrew the government. It was a huge scandal, right? Huge scandal. Really towards the end of Reagan's presidency, and he already had Alzheimer's anyway, which we didn't know at the time, but certainly he did, and so he wasn't running the country anyway at that point. So, you know, nobody did anything to him about that. We don't even know if he knew it happened. Right? You know, it's interesting stuff. You got to read history, you guys. Study. Right? Pay attention. You know, but don't just do what you do in your classes. Actually, go read things. Right? Actually, read stuff. You know, find out. So, anyway, so interesting things happen. This is going to be accumulated depreciation. So anyway, this is a contra account. What does contra mean? I just told you. Against, opposing, opposite. In this case, opposite. Okay? So this is an asset account that has a credit balance. Okay? So what we do, I did tell you this. I lied to you. Little white lie. I told you there's only 5 kinds of accounts. Guess what? There's 10. There are assets and contra assets. There are liabilities and contra liabilities. There are equity and contra equity. There are revenues, contra revenues, and expense and contra expense. The good news is there's very, very few contra accounts. Just a few. Okay? This is one of them. In assets, there are a couple. Okay, that we're going to use. All right. What do we mean by contra? Opposite the normal balance. How do you increase an asset? With a what? Debit, because the normal balance is a debit. How do you reduce it? With a credit. How do you think you increase a contra asset? With a credit, because the normal balance is a credit, because it's opposite. How do you reduce it? Debit, we're there. How about revenue and equity? Revenue, equity, and liability. How do you increase all those? You increase them with a credit, so how do you increase a contra one? Debit. Got it. Okay? Everybody good? Expense and asset, obviously, you normally increase them with a debit. So the contra would be a credit. Good. Okay, we're good. So that's what's going on here. So do you understand why we use a contra account instead of using the account itself? The piece of equipment is not going away. If it was supplies inventory, the supplies inventory is really gone, so you just credit supplies inventory. Make sense? Or merchandise inventory or whatever it is. Everybody good? So on our balance sheet, this is what we show. 32,000 equipment. At the end of the first year, 3,200 accumulated depreciation. What's the net equipment? Help me. 28.8. What that is there. Way beyond my best. Okay, everybody got it? This is easy, isn't it? What do you do next year? That was a full year, straight line. What do you do next year? Exactly the same thing. The next year, the same thing, the same thing, the same thing. What is going to be an accumulated depreciation? So here we've got equipment, right? For this particular one, you'd have lots of pieces of equipment, of course. But this particular piece of equipment is $32,000. What's going to happen to accumulated depreciation as time goes on? I put $3,200 in here the first year, don't I? Then what do? Put $3,200 in here the second year. Now $6,400. And you take that away from $32,000 would be the remaining book value, right? Net equipment. The next year we do another $3,200, right? And so on. What are we going to have in here after 10 years? $32,000. What's the remaining book value at the end of 10 years? 0. Presumably you're done with it. You used it up. Everybody got it? By the way, does this reflect market value of the asset? Of course not. We don't care what the market value is. I'll tell you what, I do not care what the market value is of that Miata. I am not selling it. Ever. No reason to. It's really fun to drive. Nice little car. I look cute in it. My wife bought it because she would look cute in it. She put a picture of it on the refrigerator for a couple of years, and I finally bought it. 2 seats for $30,000 15 years ago. It's a really nice Miata. Not anymore, but it was a really nice top of the line best seat. And that was, no, it was $20,000. I take it back. The sticker was $30,000, but I paid $20,000. It was the year the Honda came out with their little Spider thing, and Toyota came out with their little Spider, and Miata gambled that they weren't going to get them done because they hadn't for several years, and they both brought them out the same year. Everybody wanted those cars. Let's get into this idea of discount and premium later. You know, they all had really close to the same price tag. It was within $4,000 or something. And I went and looked at the Toyota and the Honda, and they were really nice. They were good cars, but they added $5,000 to each of them. And then when we bought the Miata, it was a year old when we bought it, so I hadn't been able to sell it. I didn't sell a lot, no lot on it. But they took $10,000 off of that one. It was a $15,000 difference. Do you want to buy what everybody else wants to buy? Do you want to invest in what everybody else wants to invest in? Or do you want to figure out what you want and then take the one that costs you a lot less? Would you rather invest in a company that's already doing great and they've made a whole bunch of money so the stock is way overvalued? Or would you rather invest in one that's not doing great right now but looks like it's going to take off, and you predict it's going to take off and you can get it for nothing? I want to make money. I don't want to buy what everybody else wants, right? And also I wanted to drive a little car. I wanted her to drive a little car like that, right? Now she doesn't like it at all because it messes up her hair when we put the top down. So it's not fancy anymore. It's old. Like she says, it's old. I keep telling her, you know, she gets rid of everything that's old. When is it my turn? So, yeah. She doesn't think that's funny. Okay. That's depreciation. So kind of a new concept. We're going to have a whole chapter on it. But it's not a big deal, is it? It's really not. Isn't it just kind of common sense that you credit accumulated depreciation instead of equipment? Yeah. Okay. So I know you guys are intelligent people. You can do this. God, I haven't got the whole problem yet. Paid $5,000 for a 2-year insurance premium. Okay. And this time they went to prepaid, did they? You want to do this one 2 ways too, real quick? I thought we could do it fast now. By the way, what would the insurance company have? We have prepaid. What would the insurance company have? Unearned revenue. You got it. Right? We gave up cash. What would happen to them? They'd get it. Over time, what would they have? The unearned revenue would turn into revenue. What would happen to us? Our prepaid would become an expense. Got it. Okay? All right? So, here we go. They said, well, yeah, okay. Let's see. They paid for a 2-year insurance policy on July 1st. 7/1. It's 2 years. It is $5,000. Okay? So what are they going to do? Debit. Let's go, quick. Prepaid interest. Credit. What if they instead had decided to go to an income statement account? Insurance expense. It's going to be insurance expense someday anyway. Absolutely. Okay? What are we going to want to do at December 31st? Okay. All we got to do is figure out how much expense we should have by then, right? Prepaid insurance has a balance of $5,000 in it, right? Insurance expense has nothing because we didn't put anything in there, so we know it's nothing relating to this policy. Insurance expense. This time has 5,000. Prepaid? No, right? Okay, you guys, all you got to do is say what? What do I want those accounts to be in my balance sheet and income statement? What do you want prepaid insurance to be? How much time has gone by? It's July 1st. Careful, it's not July 31st, it's July 1st. You got to count July. Okay, how many is that? 6 months. 6 months, right? June 30th, say, right? 6 months. How long was the policy?
2 years.
2 years, 24 months. 6/24, right, guys? So what you can do is take 5,000 divided by 24 and take it times 6. That works. Or just take 1/4 of it. So what's 4 into 5,000? 1,250. What should be 1,250? Is that how much I used up or how much I have left? That's how much I used up, right? 6 months in there. Insurance expense, right? 1,250. You guys agree that insurance expense is 1,250? It is, right? How much is not used up? 3/4 of it. 3,750. It's too easy. How fast can you do these? Now, don't get in such a big rush that you make errors. There's not going to be any hurry. If you really know how to do these things on these quizzes, you get done with it. Same on the test. If you really, really know what you're doing, and if you relax, you'll get more done anyway. I don't mean go slow. I mean relax and work. Okay? All right, what do we do here? How much you want a credit prepaid for? 1,250. How much you want a debit insurance expense for? 1,250. Am I right? Credit? Good deal? What would I do over here? If I had gone to an income statement account instead of a balance sheet account, so I went to insurance expense. What am I going to do, you guys? That's the 1231 insurance expense. How much do you want to take out of insurance expense? I have not used 3,750 yet, so I'm going to take out of insurance expense 3,750. Wouldn't you? And then what are you going to put into prepaid? 3,750. Even I could do this. Work at it, practice, think about it. While you're practicing working problems, be thinking the whole time. It's okay to copy what the author did once. It's okay to copy what I do once. From then on, you do it. And when you don't need to look at anything, you don't need to think about it too much anymore, you're ready. Right? That's how it works. Then you've got it. If you're still looking back at the book time and time again, you're not thinking when you're doing it properly. You're wasting your time. Okay? I guess we're going to leave on time. That's unheard of. Okay, let's do that. I'll see whoever can make it, I guess, at 1. Good for you guys. Want to work. Sad. People with no lives. Would rather work than have a life. Would somebody bring me... It's really weird. I can't print in this building, so I have to walk across the road. Would somebody bring me a copy of the 3 and 4 quiz? You guys have a copy of the 3 and 4 quiz?
Yeah, I do.
Oh, no, I don't need it now. Do you have an extra one?
Yeah.
Okay, great. I don't... Oh, you're not going to be here. I'll steal yours. Thank you. I can't print in this building, so I have to walk across the road and back. Or ride the shuttle, I guess.
Okay.
Thank you.
No, I don't.